Stocks took a tumble last week. The Dow, S&P 500 and Nasdaq all finished in the red. The Dow Jones Industrial Average fell over 1,100 points. This was a significant drop. The S&P 500 and Nasdaq also experienced losses. Investors are worried. The markets are now facing headwinds. Geopolitical uncertainty is rising. Trade tensions are also flaring up. These factors are making investors nervous. They are selling stocks and moving to safer assets. For the year, the major indexes are still up. However, the gains are shrinking. The Dow is up just over 2% for the year. The S&P 500 is up a little over 2%. The Nasdaq is clinging to a 1% gain. The market is volatile right now. Investors are unsure about the future. They are worried about the economy. They are also worried about the geopolitical situation. This uncertainty is likely to continue in the short term. Walmart is a bellwether for the economy. The retail giant reported earnings last week. The results were mixed. Walmart beat earnings expectations. However, the company issued weak guidance. Walmart is worried about the consumer. The company sees inflation taking a toll. Consumers are pulling back on spending. This is bad news for the economy. Walmart's stock fell sharply on the news. The stock is down over 6% for the week. This is a sign that investors are worried about the retail sector. They are also worried about the broader economy. Other retailers are also feeling the pinch. The Commerce Department reported that retail sales fell sharply in January. This was the biggest drop in 2 years. Consumers are clearly pulling back. The economy is showing signs of slowing. Several key economic indicators are pointing to weakness. The housing market is cooling down. The manufacturing sector is also struggling. The National Association of Home Builders Housing Market Index fell to 42 in February. This was the lowest reading in 5 months. Rising mortgage rates are cooling the housing market. High home prices are also making it difficult for buyers. Manufacturing activity is also slowing. The S&P Global Composite PMI fell to 50.4 in February. This was the lowest reading in 17 months. A reading below 50 indicates contraction. Consumer sentiment is also weakening. The University of Michigan Consumer Sentiment Index fell nearly 10% in February. Consumers are worried about inflation. They are also worried about the direction of the economy. Bonds rallied last week. Investors are fleeing to safety. They are worried about the stock market. They are also worried about the economy. The yield on the 10-year Treasury note fell to 3.8%. This is a sign that investors are buying bonds. When bond prices rise, yields fall. Municipal bonds also saw gains. Corporate bonds, on the other hand, experienced negative returns. High-yield bond trading volume was low. The bond market is signaling that trouble may be ahead. Investors are moving to safety. They are worried about the economy. They are also worried about the stock market. Are you ready to take your trading to the next level? At Elliott Waves Trades, we provide real-time alerts, in-depth market analysis, and expert education to help you navigate the stock and options markets with confidence. Exclusive stock and options alerts. Get notified about high-probability trade setups in real time. Expert market analysis. Stay ahead with our detailed breakdown of key levels, trend reversals, and breakout opportunities. Educational resources. Master proven trading strategies with our step-by-step guides and live Quanda sessions. Community support. Join a thriving community of traders sharing ideas and market insights. Don't trade alone, trade with a winning edge. Join us today and start making smarter, more profitable trades. Sign up now at tradeselliott.vip or DM us for more details.